Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, good day, everyone. How are you going? Thanks for joining us on the podcast, and I'm pretty excited about this one. It's right for us to be doing this particular podcast this time of the year. We're just kicking off. It's in the second week of work for January, which is also 2020. It's a new decade, so everyone is thinking about pastures new, and I think property is definitely one of those areas where everyone is having a look at what this next decade might look like. So it's been dominating most of my conversations, and I think we'll probably focus on this for a little while over the next couple of weeks, just to give you as much intelligence and sort of situational awareness around what's happening in property so you can start making more informed decisions. Keen to hear what you think about it all. If you want us to do more of this sort of stuff, happy to do so. We're fortunate Australia has some very talented and capable property researchers and property research organisations who are always happy and ready to share their view of the world. So I'm going to be leaning on my relationships with them and asking for some favours, and we'll get them in over 2020. And we're going to kick off today with one of those conversations. But before we do, it's a new decade. Welcome to the future. Here we are. It's 2020. And there's a new little advancement on smart property investment. We've got a new thing that we're implementing where we can start recording your questions so we can answer them on air as they are. So as you know, we do a lot of Q&A sessions. We want to do a lot more. They come in thick and fast on the email editor at smartpropertyinvestment.com.au. So if that's how you like to communicate, keep those questions coming through. We'll get them all together and we'll start doing some specific Q&A shows. But now we can do it. We can receive your questions via audio. All you need to do is go to smartpropertyinvestment.com.au, click on any of the podcast episodes, doesn't matter which one, and you'll see a big button that says start recording. So all you need to do is press that button, record your question or your message, or might be some observation. Happy either way, and we'll get them played live on the show, and we'll bring in our panel of people to answer those questions and give their opinion and insight. So remember, smartpropertyinvestment.com.au, click on any of the podcast episodes, click on the start recording button, let us know what's going on. That's really cool. I'm really excited about that, and you'll see that playing out over the next couple of weeks, and we'll keep a focus on that moving forward. But shifting into 2020 and what this decade looks like, and maybe that's too far to be thinking in advance, but I think most good property investors know that property is a long-term game, so you need to be thinking in decades rather than in years. But I'm interested to know what's going to be happening in 2020 and what's going to be happening in markets right across the nation, particularly after what was a pretty topsy-turvy 2019. So a fair bit more stability in the market. I think we know where we're going as a nation right now, and that's giving confidence to a lot of investors to make decisions around wealth creation. In the studio with me is Eliza Owens. She's the head of Australian research for CoreLogic Australia. Relatively new to the job, I believe. Eliza, how are you going?
Yeah, about a week in.
Okay.
It's been hectic, but really enjoyable. Very excited to have access to incredible data assets and hoping to just deliver the best research that I can to help people around their property decisions.
So we're pretty much very aligned in what we do, right? Like, we give information through narrative and sharing people's stories and stuff. You give a lot of the qualitative stuff, which is the meat and potato, what is actually happening so you can make those decisions. So I think most property investors know that investment decisions should be based on a whole bunch of different things, one of them being data and one of them is the narrative around it. So we can tackle some of that stuff today. You're going to be disappointed, though, in that you're only 1 week into this job and you've got the big interview first. It's only backwards. It's only backwards for you after appearing on the Smart Property Investment Show. But so what's a new job? What's your focus? How are you going to play this out? So we're very familiar. We've known the guys at CoreLogic and girls, the business CoreLogic, for many, many years. Great contributor to insights in the Australian marketplace around property. And I imagine you got some big boots to fill. So,
Absolutely,
flying that flag for data and giving those narratives. But tell us a bit about your role. What's going to be happening? What are we going to see?
Well, my role is kind of made up of regular updates based on data that comes from CoreLogic, comes from, public data sources like the ABS and the RBA and APRA, and really just trying to take that information, deliver it in a way that's interesting and engaging. I have an economics background, so I try to frame a lot of the data that we see in these fundamentals of economics to, help contextualize it, help make sense of things. And I'm also interested in, just going back to CoreLogic products, see how we can leverage some more information off the assets that we have as well.
So it's very much a frontline job, a lot of media, a lot of article writing, a lot
Yes,
of
that's
talking
right.
on podcasts. What were you doing before this? Have you always been in this data game?
So interestingly, I started when I was 19 years old. I just moved out of home and I got my first job in the call center of a small property data company called Residex.
Okay.
So my role was sitting on the phone and calling real estate agents and asking them what their recent sales were. Because for people who are familiar with the property data space, we do get a lot of sales data delivered at a lag through its consolidation and delivery from government bodies. So that was sort of my first job in property, I suppose. And then I was studying my economics degree and kind of just got more into it, really started to enjoy it. And over the years, I've been doing more reporting and researching, working as a research analyst, and just landing this gig recently. It's been
a pretty
an
cool
amazing
job. It's one of the
journey.
plum jobs in Australian property
I'm
data,
very,
right?
very lucky. Yeah.
So if I met you at a barbecue and didn't know you and I said, what do you do for a living? Do you say that you're in property, or do you say I'm in data, or do you say like I'm a mathematician, an economist? Like how do you frame yourself?
It depends how much of a fight, not fight, but you know,
Everyone
when
wants
you
to fight
say
about
you're
property.
in,
Yeah.
exactly. When you say, oh, I'm a property data analyst, and the first response is, the thing about property is, and so you, which in a way is good, you engage with lots of people on their individual experiences with the market. But I would call myself a research analyst, you know, just crunching numbers. And as I say, it doesn't just stop at property. It's looking at economic fundamentals like employment and GDP and performance of different industries as well, because those can all serve as, you know, information on the foundations of what's going to be happening with property.
I imagine you're quite popular though, if you're at a dinner party or whatever, like someone's always going to want to talk to you. It's much like a doctor. Someone goes, oh, I've got this problem. Can you diagnose it for me? I think everyone in Australia's love affair with property is well documented, but everyone's got a view or an opinion or an
Yes.
observation
Yeah.
on property. On that basis, do you think, generalizing here, and we obviously have an audience of very smart, sophisticated property investors listening to this, but you know, Australians in general, do you reckon they've got no idea what's going on when it comes to property and how it works and how data is connected in with it? Or do you think we're reasonably sophisticated as a body of people?
I think that the way data stories often get delivered can be quite confusing. So something that I like to do is, yes, we can talk about the latest data points, but I really want to emphasize contextualizing it in a broader story. So a good example of that is always asked, you know, I'm based in Sydney and I've got people in my cohort who are asking me, oh, where should I buy? Where should I buy? Looking at growth patterns across Sydney, we essentially see the same growth pattern will play out across the whole metropolitan. Yes, it'll be to different extents, but what will happen is you'll get the start of a cycle happening in close towards the CBD and the eastern suburbs, and then the growth or the decline, it will ripple out across the rest of the city. So when you've got people saying, where should I buy? Where's the next hot growth spot? I'd say personally, my opinion is any foothold you can get in the Sydney metropolitan will enjoy the kind of flow over effects of whatever's happening in the cycle
And
at
it's
that
about
time.
thinking about decades rather than
Exactly. Yeah.
minutes.
It's
Yeah.
thinking about the long term. It's thinking about how the broader cycle performs. And I think just having a better understanding of that can really help people be more confident about just getting in there and purchasing something.
So we'll have a chat about what's going on across Australia in these capital city markets in a moment, but sticking on this, I guess, philosophy that you embrace in your role and how all property investors can maybe adapt a similar philosophy is you have a lot of clues when it comes to data. It tells you stuff, right? That's happened. And hopefully you can be smart about merging of data sets and think about what it might indicate for the future, right? And that's the power of data, but it's really the contextualization of it, or what it means is when most people get it wrong. And that's probably where you get it right. Is the reason why you're doing the job you're doing. You can look at data, you look for the clues, you can look for the themes, you look for what's going on, and then say, because of that, I'm going to make this decision, or I'm going to see the world a particular way. So this philosophy of how you use data as a property investor, what do you see the best ones do? How can you make sure you have a good relationship with property data so you don't stop investing in property or you're stifled to making decisions and this sort of stuff? What works?
Yeah, I think just keeping across data over time and trying to keep in mind if you see, you know, drastic kind of declines being reported in the news, just keeping in mind that that is a point in time data point. I think looking at economic fundamentals of areas and considering not just the rise in employment or the growth of a particular industry, but really thinking about what kind of industry are we looking at? What is the likelihood that it's going to have long-term gains for an area? So that might apply to, I mean, hindsight's 2020, right? But when you think about the mining boom and bust, and the idea that that could be affected by a steel glut in China, and then overnight the dynamics of mining can totally change. Whereas maybe a more long-term, strong fundamental for a market is tourism, as Australia's become more globalized and people are visiting more from overseas. And so we say, okay, well, what is it about Hobart that makes such a appealing tourist destination, or, you know, along the coast of New South Wales? So things like that, it's almost more conceptual, I guess, than looking at every single data point on every single month. But just having that kind of confidence, I guess, that in the long term, there are areas that have continued really strong demand based on good fundamentals.
And as a property investor, which I am, what's the best way for me to use data? Is it to help steer me down a particular path to consider particular locations to invest in, or should I be using it to disprove or prove a thesis I have around where I should be investing? What's the best way to do it?
Oh, I think maybe the former.
Yeah,
sort of using data and research to sort of guide your property decision. But at the end of the day, it's such an individual thing as well. You know, it's what is your price point? Are you going to live in it? If you're going to live in it, how mobile are you as a worker? If you're going to rent it out, how close are you to the property if there needs to be something done in terms of maintenance or something like that? So it is a very individual journey. I guess we just hope that the insights that we put out can help or inspire even areas of where more research and data analysis needs to be done.
It's good. Well, let's get into that. But before we do, we'll just go to a quick break. Back in a moment.
If you're a regular listener to the Smart Property Investment Show, then odds are you're already a property fanatic who loves hearing stories on investing from real people, the good, the bad and the ugly. Be with people just like you and join the group Passionate Property Investors on Facebook now. Become part of a community who know what to do and when to do it. And the time to do it is now. Passionate Property Investors. Tribe, tools and tips. Find us on Facebook today.
Welcome back, everyone. Here with Eliza Owens. She's the head of Australian research for CoreLogic Australia. We had a really good chat around the philosophy of data, and you'll see if you've been tuning into the Smart Property Investment Show for a few years, you know, we talk about this stuff a lot about how you actually use data and how you use it effectively, and we'll keep this theme moving forward. But I want to move on to what's going on in property in Australia, because I know that's probably what you want to listen to and hear about, because you're all sitting there wondering about where you're going to invest this year, or whether or not your property where you bought is going to be going up or down or left or right. 2020, can we actually talk, Eliza, about the Australian property market? Can we say, will 2020 be a good year for Australia when it comes to property?
I mean, we have aggregate numbers on it, but it's probably not overly helpful for property holders or people making a decision around their individual market. It's good to, I guess, just talk broadly and relate to the macro factors that are affecting the market. So when we talk about the national property market, what we saw in 2019 was kind of a year of two halves, where nationally the tail end of the downswing saw prices come down about 3% over the first 6 months of 2019, and then an incredibly strong rebound of about 6% in the second half of the year. But of course, when you dig down to the capital cities, most of that rebound is coming from the dwelling markets of Sydney and Melbourne. You've still got Perth and Darwin in decline at this point. And so there are a whole lot of different dynamics that belie that aggregate figure.
And we'll get into the individual sort of capitals in a moment, but when we talk about the national property market, and I sort of concur with you on that view, what do you think is going to be, in discussion with people go, yes, 2020 is going to be much better than 2019 when it comes to property in Australia. What do you think is going to be those big macro, whether it's, you know, Australia's place in the world globally and its relationship with, you know, China, Asia, US, etc., all the way down through the current government we have, their legislation and policies towards property investment. How will that have a positive impact on Australia, do you think, in 2020?
I think we saw it through the second half of 2019. We had the re-election of the coalition government, And there was a lot of confidence that was manifesting in the market straight away because we suddenly had a more formed view around capital gains concessions and negative gearing, that those policies wouldn't be touched. A big one is the cash rate, so the national interest rate that informs what happens to mortgage rates. Research from the Reserve Bank suggests that for every 1% reduction in the cash rate, you get a corresponding increase in property prices of 8% over the following 2 years. What we saw over 2019 was a halving of the cash rate between June and October. And looking at markets, we are expecting another cash rate reduction over 2020 by another 25 basis points. And so that will mean that mortgages will get cheaper, demand for property purchases will increase, and off the back of that, we'd expect an increase in property prices as a result.
And how does that sort of frame itself within some of the commentary or context you hear from global markets around Australia's rapid increase in property? It's unsustainable. It's 10 or 11 times the average annual salary. It's so overpriced. It's this big bubble that's just about to burst. All this sort of stuff, right, which I'm sure you vary across all that commentary. What's your view of all of that? Is Australia's property market unique to Australia and can't be benchmarked against other markets because of the nature of how things work down here?
So Australia does treat property differently to other sort of countries around the world. I think in terms of a bubble, and again, the thing about a bubble is you can only really see it when it's burst, right? I think it's fair to say we did kind of have bubble conditions specifically in the house segment of the Sydney market, and then a sort of drop of about 17%. It is back up, but not quite to where it was at the peak of its cycle. And a lot of that was because there was a high concentration of investment in that market, but also a high concentration of potentially risky lending, namely in the form of high levels of interest-only loans. So that's an example of where I think we have seen a bit of a kind of bubble situation. The regulators stepped in accordingly to limit the level of interest-only lending that was going out. And so that's an important thing to remember, is that the property market isn't operating in this vacuum. It's operating in an environment where government bodies, statutory authorities can see what is happening and can intervene to make sure that things don't get too speculative or too risky. Now, in terms of the sustainability of growth in Australia's property markets, personally, so I mentioned, I'm quite confident about the Sydney market just because of what is kind of happening across the metropolitan. You've got the Greater Sydney Commission, who are dedicated to establishing 3 CBDs. You've got a virtuous cycle, so a kind of continued growth in population to Sydney and jobs in Sydney. And I think those things really help keep up demand as well. And so for that reason, I see a kind of long-term growth in that city. I guess the other thing to consider is that you can have your policy and you can have high jobs growth and high population growth at a point in time. But then I guess you have to say, is there a point where a city gets too crowded or it gets undesirable to live in? And so there may be some risks associated as the population is kind of reactionary to that. And I think a good example is of where we look at Sydney and then we hear these anecdotes of, oh, it's too expensive, it's too hectic, it's too populated, I'm moving up the coast, I'm moving down the coast. And that's where we start getting these spillovers as well.
So we'll use this as the starting point to go across Australia into different capital city markets. We'll start with Sydney, and I do get some flack from our listeners because I speak about Sydney a lot.
Yeah, I tend to be a bit Sydney-Melbourne centric as well.
So just in advance, we will speak about every capital city, but my argument would be, yes, we speak about Sydney and Melbourne the most, but that's where most activity happens.
It's where a lot of people live as well. They're our most populous cities
so
in the country.
It's going to be weighted in terms of the discussion we have around. But sticking with Sydney, so Sydney now, you're talking about 3 different CBDs. So here, Parramatta and
Western Sydney.
Yep. So is that out of Penrith or out of Liverpool, the sort of CBD
there?
Well,
there is a priority development precinct
in Greater Western Sydney.
Yep. And Liverpool is a focus of that as well. I mean, you can see, if you've ever flown in over Sydney, you can see where the high rises, which include Liverpool as well. I think one thing that might be a risk to Western Sydney, I think people will still definitely want to live there, and there's a lot of new infrastructure going in as well, which will support more jobs growth and the establishment of the airport. One of the risks might be temperature as well. We've already seen it this summer where temperatures have gotten up to 49 degrees in Penrith. So that might be something to consider as well in terms of your air conditioning costs. It's certainly something that planners have to reconcile, where they're talking about how do we balance a big new airport, tree coverage, and, keeping people kind of cool in Western Sydney. But I think ultimately it is a design that will support long-term growth in dwellings. Now, reliably, the property market will have ups and downs, and we've seen that the Sydney dwelling market fell 15% from its peak, bottomed out about 2019, but it's since come back up 6% growth alone in the December quarter, and now prices are sitting just 5% below their peak. And that's not even off the back of increased investor activity. That's first home buyers, potentially accessing the bank of mum and dad, trying to get their foot in the door. And so a lot of owner-occupier driven demand at the moment as well.
So if you're investing in Sydney, and to your point beforehand, that the whole metropolitan area will see the collective growth, what's the predictions for growth in Sydney, sort of 1 year, 3 years, sort of 5 years? And where should you be really targeting yourself?
So we're thinking that in 2020, the growth rate probably won't be as high. It won't be on the same trajectory as we've seen in the last few months. So, it could level out at maybe 3 to 5% over 2020. But the thing that we're expecting is potentially affordability constraints, and also just more stock coming on the market, because during the downswing, vendors have been very reserved. They don't want to sell their property for lower than what they think they could get it. So I think vendors are waiting to sort of see prices go up a bit further, and then with that, we'll get more stock.
On market.
That stock will ease and, give the buyers more choice, which might ease the growth rate.
Okay, and in terms of the type of assets worth concentrating on, houses over units, is it largely irrelevant, any particular suburbs that you guys really like?
Again, I think it just depends on the individual, what your strategy is. House and land is obviously good to have the land value, but I think there are a lot of people who are choosing that lifestyle of wanting to be closer to the city, and they sacrifice the land for an apartment. So I think there is value there as well.
Okay, so let's move north up to Brisbane. Anything good going to happen up there? Because I've got a lot of property up there that hasn't really done much over the last couple of years.
Yeah.
Give me some good news.
Yeah, we do actually see 2020 as a pretty good year for Brisbane, just because it's a more affordable price point than Sydney and Melbourne. So typical dwelling value, you're looking at about $500,000. Obviously, there's been very weak performance in the unit market for the last few years because of high levels of supply. That supply has been moderating for a long time as well. I think even expanding from Brisbane, just to Southeast Queensland market more generally, Gold Coast and Sunshine Coast are really nice lifestyle markets, particularly in the housing stock as well. We're also seeing jobs growth over 2019. There was a lot of jobs growth across Queensland in the scientific, technical and professional services, which we didn't really see as much in other areas of the country. So that surge in professional jobs growth could create higher incomes and more demand for that market. And we're also seeing the kind of redevelopment of the Sunshine Coast as well. They're wanting to put in this kind of new Sun Central CBD, really grounding a CBD for the Sunshine Coast, which could attract commercial tenants and promote jobs in the area as well. And
again, so if you could only buy one property this year and around that sort of $500,000-600,000 mark, would you be in Brizzy over Sydney, or who would you choose and why?
I might even go like Sunshine Coast or Gold Coast.
Okay.
It's more expensive than Brisbane, but I just think they're such beautiful parts of the country. I think the thing that had sort of been missing is, maybe there wasn't as much of a commercial focus, so you get more dated kind of eateries and things like that. Okay. And I think that's starting to change.
Yeah, it's a sort of wider gentrification, modernisation of those environments. So, and I'm really conscious of time. I want to get to Brizzy, but we'll go to a quick break beforehand. Back in a moment. At Passionate Property Investors, we hear from a lot of infinite learners who love to know more and share more about their property knowledge and investment journey. If this sounds like you and you want to get more education where your eyeballs are, then join us on Facebook at Passionate Property Investors,
videos, ebooks, and learning pathways to get your property cup filled up. Not to mention free education with a tribe who gets it. Join today by searching Passionate Property Investors on Facebook.
Welcome back, everyone. Chatting 2020 forecasts for property right across Australia with Eliza Owens. She's the head of Australian research, CoreLogic Australia. Sydney, Brisbane. Let's shift over to, you mentioned it really early on in the podcast, Darwin, which is often forgotten about unless there's a great story. And I don't think there's a great story in terms of capital value growth in Darwin, is there?
No. So we continued to see falls across the Darwin market. It was the poorest performer of the capital cities, down about another 10% over the year.
In a year. Ouch,
yeah.
That just hurts.
It does. And obviously the missing component for the Darwin market is just having the mining construction and larger construction projects. It is a beautiful city. And
I love Darwin. It's a great place.
Yeah, it's so gorgeous. And I think, anecdotally you hear of young professionals kind of wanting to start out their career with a year in Darwin, but it is a more sort of affordable market, typical dwelling value sitting at about $380,000. The rental yields are fairly strong just because the values are low. But I would say that we expect values to sort of continue to fall, perhaps at a slower pace because, again, we'll get that easing in the cash rate. But at the end of the day, it comes down to population growth. It comes down to employment opportunities. And we're not seeing too much to encourage that over 2020.
So when will Darwin bottom?
I couldn't tell you.
Can't say.
I can do some more research into it for sure, but off the top of my head, I can't say.
So as a property investor, why would you be investing in Darwin right now?
I think if you look closer towards the waterfront or the city centre, there is potential for the rental return to be decent just because the workforce tends to be a bit more transient. So there's more of a demand for rentals in the city.
Okay, cool. And Perth's been a bit of a hard luck story the last few years. My people in property tell me that things may be bubbling. There might be a change there. What's going on?
So the December CoreLogic home value indices showed that Perth had a second month where prices didn't fall.
Okay, that's positive.
That's positive. Still fairly significant declines over 2019 at about 7%. What I guess separates, because it's the same story, right, with Perth and Darwin. It was the mining bust that's seen continued decline since about 2014. The difference is that we are starting to see a real tightening in the rental market. So Perth has had the fastest decline in the rental vacancy rate. The value of rents is up about 2% over the year. And we are seeing kind of a continuing positive direction in migration, which means that combined with a lack of interest and development in Perth, the rental market is tightening. And over time, I suppose that as the rental market becomes in higher demand, it becomes more appealing to investors, which might see demand and capital growth increase as well.
And any particular assets you should be considering out in Perth as better investments than others?
Again, it depends on the strategy. I have noted that even just in today's data, in terms of approved dwellings for the Perth region, it looks like there's been a bit of an uplift in approvals.
Okay.
I think there might be a risk of over-speculating on the fact that, capital growth in Perth hasn't come back up. It's just flat over the month, right? So I think I'd be conscious of expecting capital growth too quickly, especially because it seems that developers are already trying to get all these approvals through. But maybe in more lifestyle areas of Perth, the northern suburbs close to beaches or things like that might have more appeal.
Okay. South Australia, Adelaide,
Radelaide, another beautiful city, fairly flat in terms of its capital growth. Traditionally more of an owner-occupier market. We tend to see more demand for houses than units across Adelaide. But Adelaide is one of the cities we think could benefit from higher levels of growth in 2020 just because, again, of the affordability potentially pushing people out of Sydney and Melbourne. It's a relatively affordable city to look into.
I was at a function in Adelaide later part of last year. Was with the Institute of Public Accountants, and I've always had a weird sort of relationship with Adelaide. I've only ever sort of gone to the airport to the convention centre. But I actually went to a restaurant up on the hill in Adelaide Hills that looks out back over Adelaide, and it really helped me understand Adelaide a lot more when I could see the whole city it's together,
it's beautiful.
Fixed my geography, and I could see why a lot of people want to live. It's very leafy, it's very green, lots of different pockets of property. And it's a great place to live. There's so much economic development and growth going on in there, particularly around the defence sector.
Very drivable as well. Very drivable. It's got that appeal of just not being as hustle and bustle, I guess, as Sydney and Melbourne.
I can see why people want to live there.
Definitely.
It's a cool place.
Yeah.
It's a cool place. We'll end in Melbourne. So Tasmania.
Yes.
Hobart. Can we talk about Tasmania as Tasmania, or do we need to talk about Hobart? Hobart, Launceston, same but different. What do you think about Hobart? It has a pretty good run.
Hobart's had a good run. I think it's important to remember that massive Hobart upswing came off the back of a long period of stagnation. It came from a place where it had a lot of room to grow, and it's really realised, I think, a lot of the value in the market. What we would have expected under, everything else being equal was that Adelaide might follow the Sydney and Melbourne cycle into its downswing, but because we are expecting a cash rate cut in 2020, we think that might help support further demand, and it might sort of avoid a downswing altogether. So we have seen growth rates soften, but there might be another surge in demand off the back of a cash rate reduction.
Okay. And Melbourne, let's finish there. How's Melbourne looking? It's a similar tale to Sydney.
Similar tale to Sydney. I think the fact is that Melbourne has sort of outperformed Sydney in terms of population growth. So, for example, even with high levels of new investment stock hitting the market, the rental vacancy rate hasn't changed too much in Melbourne, and that's because it's sort of had a high levels of population growth keeping up with demand. Prices we're expecting, again, off the back of a very strong upswing in the second half of 2019, that the capital growth rate may start to soften off the back of affordability constraints.
Okay.
ACT?
Yes, everyone loves the ACT. It's probably one of the top performer, or Canberra ACT, depending on what it is. Or even, I guess you could talk about Queanbeyan as part of that. It's all part of the same family.
Yeah, for sure.
But what's happening down there?
So the ACT market has done quite well over the year. Capital growth of about 3%, and it's again it's followed that Sydney-Melbourne cycle. The unit market not doing as well just because of very high levels of supply and the nature of that supply, because it's sort of more investor grade stock, hasn't been as desirable in terms of desirability from renters. So the unit market has not been looking so good, but we have seen a bit of a pickup in recent months, and we expect that it could be one of those less expensive markets to benefit from higher growth levels in 2020.
So if you're looking to invest in Canberra, consider both house and apartments, but be particular about which apartments you buy.
Yeah, I think so. Apartments are definitely a more affordable price point for that particular market. The house market is getting quite expensive, with a typical purchase or typical value of about $690,000. So, it just depends on what kind of property you buy.
Yeah. Okay, cool. I really enjoy the chat. Let's get you in the studio more often.
Oh, thank you so much. I'd love to.
It's given us somewhere to start from. Yes. So it started 2020. So we had a look at these markets, and I reckon if we had this same conversation last year, we'd probably be sitting with our heads in our hands saying,
probably
not going to be a good year, right? So, to your point, and it sort of echoes my sentiments that I mentioned at the start of the podcast around a lot more certainty for Australian property investors based on who the government is, what the government's doing, their role with the regulators, how the regulators see the world. You spoke briefly around APRA's intervention in interest-only loans and that sort of stuff, which
that's
helped.
All been repealed as well, a lot of those limits on investment lending. Because investment levels continue to track pretty low, we wouldn't expect them to intervene again until the lending scene becomes more risky.
Yeah. It's going to be easy to get mortgages, do you think, in 2020? Or there's still going to be the same rigour?
Yeah, it's a mixed bag. I think because APRA's repealed limits on investment lending, banks are certainly trying to retarget the investor segment. We're also seeing the assessment rates have changed, so sitting at 2.5% above the product rate as opposed to this floor of 7%. So from that perspective, people's borrowing capacity might be increased. But at the same time, in the wake of the Royal Commission, there's going to be, I think, a movement away from the classic household expenditure model when it comes to assessing people's consumption, and more kind of digging into what your expenses look like.
I think get your finances in order is what we're talking about here. And if banks love lending you money if they feel like you're a good person to lend money to. So sort your stuff out. But Eliza, thanks so much for coming in. Really enjoyed the chat. We'll keep going with this. We can maybe drill down into some specific markets moving forward rather than just sort of doing a catch-all.
Sounds good.
And we won't start with Sydney. So there's a breather sigh of relief. We'll start looking at some of these other markets in depth and detail a little bit more. Yeah, but appreciate your time. Thank you so much.
Thanks for having me.
So remember, if you like what we're talking about today and you've got some questions about it, we do have our new way you can connect with us. You can record your question on smartpropertyinvestment.com.au. Just go there, click on any of the podcast episodes. You'll see a massive button that says start recording. Press it, tell us what's going on, press stop. It'll come through to us and we'll play them live on air. So you can hear yourself on the Smart Property Investment Show when we answer your questions. We'll even get Eliza back in to do a Q&A with us. So keep them coming through, whether it's through email, editor@smartpropertyinvestment.com.au, or via the recording. We'll curate a whole bunch together, which are around property data and should I invest here and there, and we'll get Eliza in to help us answer those. That'll be really cool. So you're committed to it now. Sorry.
Oh, no.
Do that. Give it a go. We want to see how it progresses. Any feedback or commentary as well about how we can continue to evolve the show and amplify our ability to give you greater insights to make more informed decisions. We're right across it. We want to hear from you. Editor@smartpropertyinvestment.com.au. Social media, you can even send us a direct message on that. We cover that pretty quickly, or if that's how you like to get your info, just search for Smart Property HQ. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.